Ever wondered what TDS compliance in India involves? Well, it's an integral part of the country's tax system, governed primarily by the Income Tax Act of 1961. The act mandates that individuals and entities making certain payments must deduct a specified percentage of tax at the time of payment and remit it to the government within specified timelines. The scope of TDS, or tax deducted at source, covers various types of payments. These include salaries, interest, rent, commission, contractor payments, professional fees, and more. The rates at which TDS is deducted vary based on the nature of the payment and the provisions of the Income Tax Act. Thus, it's crucial for deductors to accurately determine the applicable TDS rates and deduct the correct amount to avoid penalties and legal consequences. So, how does one comply with TDS provisions? It's a multi-step process. Firstly, deducting TDS. This involves identifying transactions liable for TDS and deducting the appropriate amount of tax when making payments. Understanding the applicable rates and ensuring compliance with TDS provisions for each type of payment is key here. Secondly, depositing TDS. After deducting TDS, the deducted tax amount must be deposited with the government within the prescribed timelines. Typically, TDS payments are made through online channels such as internet banking or at authorized bank branches. Thirdly, filing TDS returns. Deductors must file periodic TDS returns with the Income Tax Department. These returns provide details of TDS deductions made during the relevant period, including the PAN or permanent account number of deductees, the amount of TDS deducted, and other relevant information. These returns are filed either quarterly or annually, depending on the category of the deductor. Lastly, issuing TDS certificates. Deductors also need to issue TDS certificates to the deductees. These certificates provide details of the TDS deductions made on payments received by the deductee during the financial year. They serve as proof of tax deducted and are essential for deductees to claim credit for the tax deducted at source when filing their income tax returns. Compliance with TDS provisions is essential for both deductors and deductees. It ensures smooth tax operations and helps avoid penalties for non-compliance. The Income Tax Department regularly monitors TDS compliance through audits and scrutiny. Failure to comply with TDS requirements can result in penalties, interest, and other legal consequences. Therefore, staying updated with TDS provisions and ensuring accurate compliance with the law is of utmost importance. So, to sum up, TDS compliance in India involves 4 main steps: deducting TDS, depositing TDS, filing TDS returns, and issuing TDS certificates. Following these steps diligently can help avoid legal hassles and ensure smooth tax operations.